You do not need years of finance experience to start a brokerage, but you do need to understand how the business works, where deals come from, how lenders evaluate applications, and how to guide a customer from "I need equipment" to a completed transaction. In this video, I'll walk you through the beginner roadmap for starting a brokerage, from choosing your market to finding your first deal. And stay until the end, because I'll give you a simple first 30-day action plan. A broker connects a business that needs financing with a lender that can provide it. The customer may need a truck, trailer, excavator, medical equipment, manufacturing machinery, or another business asset. The broker usually does not provide the money personally. Instead, the broker helps organize the request, collect information, identify potential lenders, and move the application through the process. Think of the broker as a guide and matchmaker. The customer may not know which financing option fits. The lender may not want to spend time sorting through incomplete applications. A good broker helps both sides communicate clearly. That is the value you bring. The first mistake beginners make is trying to finance everything for everyone. A better approach is to start with one customer type or equipment category. For example, transportation companies needing trucks or trailers, contractors needing construction equipment, medical practices needing specialized equipment, manufacturers upgrading machinery, or new businesses purchasing their first major asset. Why choose a market? Because specialization makes your marketing clearer. It also helps you learn the equipment, the customers, the common documents, and the lenders that understand that industry. You do not need to stay in one category forever, but when you are starting, focus gives you credibility faster. Choose a market where businesses regularly need expensive equipment and where you can consistently reach potential customers. Before you approach customers, learn the basic financing structures. A customer may be considering a loan, a lease, or another commercial financing option. You should understand the approximate cost of the equipment, the customer's business history, revenue and cash flow, credit profile, down payment expectations, the useful life of the equipment, whether the equipment is new or used, and how the financing payment fits the business. You do not need to become an attorney, accountant, or underwriter, but you do need to know enough to ask good questions and avoid making promises you cannot guarantee. Also remember, licensing, registration, disclosures, and compliance requirements can vary by location and business model. Get professional guidance before making claims about what is legally required in your area. Your lender network is one of the most important assets in this business. Different lenders have different preferences. One may prefer established companies. Another may work with newer businesses. Some may focus on specific equipment types, industries, credit profiles, or transaction sizes. Your goal is not to collect the largest possible list of lenders. Your goal is to understand which lender is a good fit for which type of customer. Create a simple tracking sheet with information such as industries accepted, equipment types accepted, minimum time in business, credit preferences, typical transaction size, required documents, application process, and communication expectations. Start with quality relationships. Ask lenders what makes an application strong, what causes delays, and what types of deals they do not want. That information will save you time and improve your submissions. A professional process makes you easier to trust. Your process can be simple. First, have a discovery conversation. Ask what equipment the customer wants, why they need it, how soon they need it, and whether they already have a purchase quote. Next, collect the basic information needed to understand the opportunity. Then, review the request and explain the next step clearly. After that, submit the application to an appropriate lender and keep the customer updated. Finally, help coordinate communication between the customer, lender, and equipment seller until the transaction is completed. Do not disappear after submitting an application. Customers remember communication. Even if the lender has not made a decision yet, a quick update can prevent confusion and build trust. If you are learning how to become a loan broker, subscribe to Equipment Finance Academy. This channel is designed to help beginners understand the business, find opportunities, communicate with customers, and build a repeatable brokerage process. Now, let's talk about the part most beginners struggle with: finding customers. You do not need a massive audience to find your first opportunity. Start with people and businesses already connected to equipment purchases. Potential referral sources include equipment dealers, equipment manufacturers, contractors, truck and trailer dealers, accountants, insurance agents, business consultants, commercial real estate professionals, and industry associations. Your message should be simple. Do not begin with a complicated sales pitch. Explain who you help, what type of equipment you focus on, and how you make the financing process easier. For example, I help construction companies explore financing options when they are purchasing equipment. If one of your customers needs help understanding the next step, I can help organize the request. That is clearer than saying, "I can get anyone approved." Never promise approval, a specific rate, or a guaranteed funding result. Your job is to guide the process professionally. Your first few applications are learning opportunities. Track what happened with each one. Where did the customer come from? What equipment were they buying? Which documents were missing? Which lender reviewed the request? What questions caused confusion? What caused the deal to move forward or stop? Over time, these notes become your operating system. You will start recognizing stronger opportunities earlier. You will know which customers need more preparation. You will also learn which referral sources send serious prospects. That is how a beginner develops judgment, not by trying to sound experienced, but by paying attention to every transaction. Here is a practical first 30-day plan. Days 1 through 7. Choose your target market and study the basic financing terms. Create a list of common equipment and customer questions. Days 8 through 14. Research potential lenders and build your lender tracking sheet. Learn their application requirements. Days 15 through 21. Create your basic customer intake process, email templates, follow-up messages, and document checklist. Days 22 through 30. Contact referral partners every day. Have real conversations. Ask what equipment their customers are buying and where financing questions come up. Your goal in the first month is not to look like a giant company. Your goal is to become useful, organized, and consistent. Avoid these common mistakes. First, trying to serve every industry immediately. Second, sending incomplete applications to lenders. Third, promising approval before a lender has reviewed the request. Fourth, failing to follow up with customers. Fifth, focusing only on getting leads instead of building referral relationships. And finally, believing that one course, one lender, or one marketing method will build the entire business for you. Training gives you a foundation. Results come from applying what you learn repeatedly. Starting a brokerage with no experience is possible, but it is not automatic. You need a clear market, basic financing knowledge, strong lender relationships, an organized customer process, and consistent outreach. Start small. Learn one market. Complete one process correctly. Then improve it. If this video helped you understand the roadmap, subscribe to Equipment Finance Academy and comment with the industry you want to serve first. Your next step is simple. Choose your market and begin building your first referral list today.